Good morning, everyone. Welcome to this week's weekly market view for Monday, 4th of April to Friday, the 8th of April 2022. My name is Vishal and I'm going to be doing this week's market view analysis. So let's get started. All right, so let's start our analysis with the Nifty chart. Let's start with the monthly chart. And on the monthly chart, we can clearly see that Nifty has bounced strongly. This monthly demand zone is holding and holding nicely. We also had a bit of a rally at the end of the day. Whether this rally was more pertaining to short covering or whether it was a genuine rally, depending on where the markets will open today, will decide whether this rally will continue to the upside. And if you look at the weekly chart, on the weekly chart also, and that's over here, you will also see that the prices are trying to push and possibly creating a fresh level of demand. So the key things to look at for this week would be a break of this level, and if this candle is able to break this 17,802 level convincingly, then we are going to have a new level of demand in the making. So this level will be something that we need to watch out for in the coming days, where 17,303 will probably act as a strong support for the market before the market moves to the upside. If you look at the daily chart, and we also have the IV gauge plotted on this chart. So basically this tool reflects the expectations of the people, whether the options premiums are cheap or expensive. And because of the significant rise in the market in the last half an hour on Friday last week, we saw a considerable drop in volatility. Now this indicates that the market is moving up and the option premiums are becoming cheaper in price. So right now, if you're an options trader, you should be looking at possibly creating debit strategies or directional strategies, but not towards the sell side, but more towards the buying option side. All right, because volatility is becoming cheaper and cheaper, right? So let's see today how the markets open, and in a couple of minutes we are going to have the USD INR market open. Let's move on to the next script, which is the Bank Nifty, and let's look at the Bank Nifty. So the Bank Nifty on the monthly chart is holding on to this level, and just very similar to the Nifty, the Bank Nifty is also holding pretty strong, right? And if you look at this overall area here, this area is also an area from where the markets are bouncing. So this is the monthly area. Prices have retested this area and prices are moving to the upside. So very similar to the Nifty, there is an area of consolidation over here, and there is not yet any confirmation about this area yet, but maybe this week, depending on how Bank Nifty closes or the weekly candle closes, we'll more or less get a little bit of a view over here, right? If you look at the daily chart, very similar to the Nifty, you see Bank Nifty volatility in options has also considerably dropped, and options are pretty much cheap at the moment right now. So one should be buying options and not selling options, and this is what measures the expectations of the crowd. So we do have a little bit of overhead gap supply which is present over here, and again depending upon where the markets open today, the SGX Nifty currently is showing 22 points to the downside, but I'm sure that when the markets open, more or less the markets should ideally open flat to maybe slightly positive or very slightly negative, and from there on the market should probably decide the direction for the day. Let's quickly have a look at USD INR, because the USD INR market is inversely correlated to the Nifty. So let's remove all these tools from the chart. And as I mentioned in my past sessions also, the USD INR is unable to break this high and close above this high. So in technical terms, we call this a fake out, and if this is a fake out, then the USD INR can correct significantly to the downside, which means that there is a possibility for the indices, that is the Nifty, Bank Nifty, to move to the upside. If you look at the weekly chart, there is no clear level of demand. There is definitely this level of supply to watch out for, as prices might go up and retest this area before again coming to the downside, right? So this is an area to possibly watch out for. Let's move on to the sector for the week. We have the auto sector, and let's see how the auto sector has done. So let's get all these. So if you look at the monthly chart, and the perspective of this higher time frame gives us a little bit of a direction of what the markets are doing, right? So if you look at the monthly chart on the auto sector, we see that this level of demand is holding, and right now the auto sector on the monthly chart is in a slightly bullish to consolidation phase, right? If you look at the weekly chart, last week we had a bounce coming out of this weekly demand, which is a tested weekly demand, and if you closely look, the overhead supply on the weekly is right here, right? So there is a potential for the market to move to the upside. However, taking into consideration, there is also this daily supply which is close to the current market price, and right now the CNX auto sector is trading within this daily supply. So it will be interesting to see today how the market opens, and whether the prices react from this supply or whether the market continues to move up because of the strength in the Nifty. The stock for the week is Maruti, and one of the ideas or the educational ideas that we have identified for you this week is on Maruti. So if you go and look at Maruti, and if you compare that with the auto sector, more or less the picture remains the same. However, if you look at a slightly smaller time frame, let's say the 30-minute chart, so there is this area on the 30-minute chart which is a little interesting, right? So you see all this consolidation, and just above the consolidation you see a potential supply zone on Maruti. So this is an area to watch out for on Maruti. This is that 30-minute supply zone. It has tested once very slightly on the departure to the move going downside, but because the move is so strong to the downside, there is still an anticipation that there could still be some unfilled orders pending over there. So this also becomes a trading opportunity, and we will review this trading opportunity once the price hits the level, and we'll bring this opportunity back once again in our next week's or the session once the trade triggers. So have a lovely week, everyone. Enjoy your trading, and see you next week, same place, same time. Thank you. Bye-bye.
We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.